Hi, my name is Louisa Sijabat, and I'm a liquidator and bankruptcy trustee. Today's question is this scenario. My company needs to go into liquidation. This company owns a vehicle which is presently financed. I'd like to keep the vehicle, and in order to do so, I'm willing to transfer the vehicle and the financing into my own name. I want to do that before liquidation. Is that okay? So, there's a few things to work out in order to determine if that's okay. So firstly, the finance company needs to be okay with the proposed transfer. So they need to assess the credit of either yourself or whatever entity it's going to be transferred into and be all right with that transfer. Secondly, we need to assess if there's any equity in the vehicle. We do that by having a look at what the estimated resale value of the vehicle is, minus the amount of financing owed on the vehicle. Now, sometimes the financing owed on the vehicle is equal to or more than the resale value of the vehicle. This especially happens when the financing and the vehicle or the lease arrangement is quite new, or if the vehicle is otherwise fully financed or nearly fully financed. Now, if there's no equity in the vehicle, such as if the financing exceeds the value of the vehicle or is equal to the resale value of the vehicle, then nothing further needs to happen at this point. The main thing is the financier needs to be okay and approve the transfer. However, if there is equity in the vehicle, the company who presently owns the company needs to be compensated for that. So you, as the person taking over the financing, needs to actually make a cash payment to the bank account of the company that currently holds the vehicle for the amount of the equity. So for example, if the financing of the vehicle is $20,000 and the vehicle is worth $30,000 and the financier agrees to the transfer, you need to then pay the company $10,000 because that's the equity in the vehicle. This is so that you're not asset stripping assets out of the company, which is not a good thing to be doing, and so that this transaction is not subject to clawback during the expected liquidation, which is expected to follow.